we are starting to see interest rates rise faster than they have in decades. I'm Garrett Stewart, and we're going to take a look at the impact of these rising mortgage interest rates on the housing market nationally and as well as in Reno here as well. So let's take a look. Taking a look at the beginning of the year, you can see that we have came up quite a bit from December 30th, 3.11%, all the way to the end of March of 4.67%. This is the biggest in a 90-day, 3-month period, the fastest the interest rate has gone up since 1994. So they're moving pretty quickly, but I've got some interesting information that I think will help alleviate some worry with the potential rising interest rates. All right, I've got some reading for you here, but I'll read it for you real quick. So mortgage rates are likely to continue to move higher throughout the balance of 2022. Although the pace of rate increases is likely to moderate, much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with Federal Reserve interest rate policy. So that was from a deputy chief economist from Freddie Mac. And basically what this is saying, the rates we're speculative and we're going up because the rates are going to go up even more later this year. So we're going to probably see rates continue to trend upward, but not as fast now that we've already kind of started to outpace that. So we'll keep watching that though. How has rising interest rates affected home prices in previous years? Well, we've got some start dates to end dates of different times that interest rates have gone up for more than 1 percentage rate. Or percentage point. And you can see that out of in 93, 96, 98, 2003, 2005, and 2012, look at all of them. Home prices still went upwards those years. So while we do anticipate things to slow down a little bit, home prices are still likely going to continue to trend upward with as much pent-up demand and little inventory we do have. Now, this was interesting. While home prices will go up, we're same statistics essentially, but looking at home sales instead. Look at the home sales. All of them went down except for one, which was in June 2003 to June 2004, when there was just a little over 1% change. And that was over an entire year. So it went up just a little bit in terms of home sales. So I do believe that we're going to start to see home sales start to come down from year over year counts. If you watched my video last week, which you can watch it right up here in the corner or below, make sure you watch that because I talk about the homes here in Reno and all the different pricing and where I think we're going to go in terms of inventory and stuff. I think we're going to start to see more and more homes hit the market. Now, the director of forecasting for the National Association of Realtors said this: while higher short-term interest rates will push up mortgage rates, I expect some of this impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred over the past few weeks. So that's encouraging news. I know a lot of people are getting nervous. Is it going to be like this for the rest of the year? We don't anticipate that, and neither do these big forecasters. This one's from Freddie Mac, and I thought it was really interesting in forecasting. History suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analysis shows that a 1% increase in mortgage rates results in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. So I thought that was really fascinating. And so, like I said, while things will move fast or quicker at first, as everyone's trying to scramble because they know that rates are going to continue to go upward, we're seeing kind of in February and beginning of March, we saw people start to really realize that rates were jumping. Now we're starting to see it start to slow. I think we already hit that little peak of everyone rushing to try to lock something in. So just to quickly go over what we talked about with mortgage rates, you can see what we've done since 2016 here. And while pre-pandemic interest rates were back where we are currently today. Now, I understand that home prices have gone up since then, and so that is something to think of. But interest rates have been a lot higher before, and if that's something I'm concerned for you, we can figure out options for you. So please let me know about that. And I just wanted to show you those quick numbers real quick. And to finish this up, I wanted to show how our showing traffic has been in 2022 with buyers getting out on the market this far versus previous years. And you can see here, this is from showing time. This is nationwide. And you can see that showings in 2022 for February of 2022 outpaced the last 5 Februarys. So look at that on their index. So that's that rush of buyers going out there as they're seeing the interest rates start to go up. So really interesting. So I wanted to share that with you. If you liked what you saw, hit the like button, please. That helps a lot. Be sure to hit the subscribe button over here to watch all of my future videos. I'm going to be following up on this a lot because we're going to see more stuff change. Watch my other videos over here, and I'll see you next time. Thanks for watching.